Hey everyone. All right. First, I gotta share this link out to a bunch of places. So bear with me. I'm just gonna share it in Telegram. And I'll share it on Twitter. I hope you're all doing well. This will be a pretty chill live stream. Might be interested in taking some more trades, but we'll see. All right, so let's take a look at the charts. First off, on a high time frame, this is a major level, and it's actually still a potential target when we were consolidating at the highs here. It's the golden pocket from this high to this low. We do have a relatively clean ascending channel idea here. It got moved a little bit. That we have now tapped. And my basic idea here is, well, I want shorts from here if we're seeing weakness. And understanding that it's always possible we break out. You know, maybe we come back and backtest these highs and break out. That's why you always use risk management. There's not a lot of structure up into these highs if we do break out. But this would be a pretty classic fake out idea as well. Certainly a lot of volume coming in here. Lots of shorts stopped out. You can see when we broke this high, there was a lot of stops there. And we had a $143 million 5-minute candle. Now, there's kind of two ways that price can reject from here if it does, which is we just do this and then the bottom drops out, and we start retracing this move quite quickly where there's no structure. There's always the possibility that we just form a range here first. So, you know, maybe we come back down and we back test this. This is going to be a major level of support because this is our SR flip, right? If we're going to have a breakout, and oftentimes whether or not you're going to have a continuation or not, you will get a reaction off this level. But I would presume if we get a reaction here, that this is where we might start seeing a range form. And the reason I said I'd be interested in opening my short if we sweep these highs again, I have my stop above the highs, is because I want to be prepared if a range forms, right? And if price action ends up looking more like this than it does like this, it's very common for ranges to form. So you always want to be prepared for that idea. And of course, the good thing about a range forming is you can end up sizing up a little bit more because you have much tighter invalidation on setups like this, where you sweep the highs and you can enter on the rejection as a local scalp at the range highs with invalidation above the new high. Someone asking if I would TP1 here, because I'm short from up here at the SR flip. I think it's perfectly reasonable. I would, you know, there's kind of two things you could do. I prefer oftentimes hedging. And if you want to look at this as a local range, well, you have this SR flip. And then if you see some strength and you're reclaiming these lows, then you could also just try a long, right? And so you have your swing short running, you have a scalp long running, and this could turn into a swing. But I'm not really a big fan here at a major level like this of chopping down my position quickly. I made the joke. You know, I did catch some of this move. And by some of it, I mean, I caught all of it, but just not with big size. Over the weekend, I had, I made the joke that the Discord, everybody's XRP maxis, because I did share a XRP long idea. And I brought my stop up to entry. I want to go to where I, yeah. So anyways, I had this idea, I said, keeping an eye on XRP, a potential entry down here. I had the idea a little bit higher for a swing long. And then I took the entry aggressively, and then we had that big impulse. And so I have a decent amount of that running. I can pop over to the chart really quick. But it was taking that long down here. I just want to take a quick look, because this does look like it's right at the 618. But yeah, so I'm happy to leave that long running, and I only caught a little bit of size on the, about, the, you know, it depends how you look at it. It's about 1/5 of the size I would have liked to have on Bitcoin and ETH. And I had entered in right here, right before this impulse. Just sort of the timing of it was coincidental more than planned. But we just had this consolidation on the 5-minute chart. There was a lot of bullish absorption and order flow there. And I figured since we'd reclaimed some important levels on ETH and Bitcoin, it was worth trying a small long on the weekend. And so I caught some of that. But I also did get stopped out of a short here on Bitcoin. I shorted this level. We did get a decent reaction off of it. And this is this high time frame SR flip where I shorted. You can't see the rejection on the 4-hour chart. Or I guess you can. We had a big wick down from it. And then I took a stop on ETH. So I've shorted ETH and Bitcoin one time on this move up. And got stopped out. You know, as ETH was consolidating and pushing up here, down here I said I'd be interested in a short sweeping these highs. There's some key levels there too that aren't on the chart. I'm just going over these, you know, people, it's always good to just talk about some trades you took that didn't work, and this one might not work as well, obviously. But we swept that high, we rejected. I took a short there, and then I did take a stop. So I had some winners, had some losers. XRP is doing okay. But something I keep an eye on here often is order flow. So one of the things that was a decision at taking the short aggressively here was we did start to see some bearish absorption, but nothing major, and pretty neutral here on the 15-minute anyways. Also take a look at EXO. Same thing, it's just a more granular look at all of the orders coming in. So worth noting here, still quite a few longs opening on this big $144 million candle. So there certainly is a case to be made for running those longs. I'm gonna move this to the 15-minute chart. It's a little cramped here. Like I said, it's always possible to break out here. I'd be a little surprised if we do, but I want to take a look at ETH quickly as well. ETH has notable bullish divergences here, frankly. I'm not shorting ETH, but that is interesting to note. That's the other thing I was pointing out on the weekend is Bitcoin had kind of front run some major targets at the lows, but ETH had actually capped this level perfectly when it made its low, and then had absolutely perfectly clean reclaim and back test of this level. And I was making note of that on the weekend because although I don't like trading the weekend, this is a case where I did take a small position, but where it might have been prudent just to take a bigger position because of how nice the structure looks. You certainly would imagine that ETH would want to take this high. At a minimum. Which might be something to factor in with Bitcoin. What is going on here? Give me 1 minute. I'm getting a price alert on my phone, but it's not the same on the chart. Which is interesting. It does look like, I mean, we do have our local golden pocket right above us. So it seems it wouldn't be entirely surprising here to come back and at least sweep these local highs. But we'll see. But yeah, where I'd be interested in, because my short is already from here, I'm not particularly interested in shorting here. But I would be interested in reopening a short here. And I might be interested in taking a scalp long at a sweep at these lows. ETH is about to take its high. And I'm just kind of curious to see what happens if we take this high. It's always possible that ETH does something like this while Bitcoin just tests its local high. I'll mark out this level just for clarity's sake. There's our 786 right here. Yeah, that would actually be a short I'd be quite interested in on ETH. So, just pointing out for those who aren't familiar, the 786 is a really important alt or fib for alts, and ETH falls under that category. Obviously, I mean, you all oftentimes get really nice reactions off the 786. We're gonna be jumping around between charts a lot here. The ETH breaking out because I might be taking some trades here, and I haven't been reading the chat. I will do so in a bit, but I just want to pay attention because I might be taking a trade here. I'm always using strict risk management. It's not a big deal to me if I get stopped out of a trade. Just try to trade to the best of my abilities and interpret price action as accurately as possible. I find it very interesting, you know, with Bitcoin, trying to think about, we really certainly, we need to see Bitcoin just be ranging here as a possibility while ETH pushes up into this level. That's still pretty far away. That's 3% away. That would make sense. Bitcoin could just test its local high while ETH moves another 3%. I will come back and read the chat in a moment. Because I'm going to be flipping charts, I just want to add an alert as we approach this high. I will add one. I do think it very unlikely ETH does not at least take this high. And we have quite a few confluences up above us. How did that get moved? But this channel looks quite nice, aligned with the 786 overhead. This local ascending channel is just sort of I just kind of threw it on as a rough idea. Not as interested in the confluence there, but certainly there is a clean ascending channel here. And we have a perfect overlap of the ascending channel, the higher time frame ascending channel, and the 786 here this afternoon, but that's still a few hours away. And if you're not familiar with my style or my content, maybe you've seen some Twitter posts. I just trade key levels. I trade price action. I look at the order flow, look for absorption, look for traders to get trapped. I have high time frame analysis and ideas. You know, I'm usually pretty good at identifying key support and resistance ideas, but ultimately I'm not trying to predict what price will do. I understand ETH and Bitcoin, everything can break out. But I want to trade key levels with invalidation. Just to clean up this chart a bit, I'm actually just going to what am I going to do here? Actually just going to mark this overlap up. So this would be like a local swing failure on ETH. Like if you were scalping this as a local range, you see this wick through and rejection. But as far as a swing short, although we could reject from here, I'd be less interested because we're leaving this high above us intact, and I'd like to see that high taken. But ultimately, I'd like to see this 786 and channel tapped. But because we have that level above us on ETH, and we can imagine forming a local range here and maybe in the next few hours coming up and tapping this level, it does make me even more interested in looking for a scalp long here when I pull back on Bitcoin, leaving my short because we could just break down and I don't want to close a swing short just because I'm taking a scalp long, but targeting back up into the highs of the range here. And it might be interesting to look at some scalp long ideas on ETH. As crazy as it sounds, when I'm scalping, I do like to look at the 1 minute chart because I like to see the structure broken up between the 5 minute candles. You know, you can oftentimes get nice entry triggers off of this low time frame price action. So I'm just going to build out my range here on ETH because this would be a local range. Swing failure retesting here would be a swing failure retest. And I'm going to look at some order flow in a second. But if you're scalping this as a local range, even the retest could make sense. And where I might be interested in longs is actually down at the 786, taking these impulse lows. But I wouldn't mind, yeah, that would be a nice setup. So I did a poll recently if people understood what risk reward meant or the RR of a trade. And so like a trade like this would be like a 10-to-1 risk reward, right? So if you take trades like this regularly, you're not going to win them all, but you only have to win a small percentage of them at 10 to 1 risk reward. You're risking $1 or 9 to 1, risking $1 to make $9. Someone's saying no audio. Is that true? Oh. All right. Let me just flip through the chat really quick. Somebody's asking what's the difference between the Lucky Ape and the Learning Ape on the Discord. I can flip over and just show that really quickly. Lucky Ape, which is the higher tier or the $97 one, is it has all the educational materials. So there's channels here, all the educational videos and educational slides on different topics and whatever. That comes with Learning Ape as well. So it's all the educational materials. Then the Lucky Ape, this is just the chat room. It's very active. You know, the public Discord doesn't seem very active, but there's, you know, this is in the last, since I went to sleep last night, I haven't even flipped through the chat yet. Sometimes I do, sometimes I don't. But this is just the chat room. Then there's places where people share all their ideas. Ooh, very nice. And then there's all the read-only updates. So that's where I give updates on ETH, on Bitcoin. So yesterday I was talking about at the local range lows, we had bullish absorption. So I was interested in scalping along there. That was down here. We had some pretty clear bullish absorption forming. But I never did give an update on that idea, although I give the premise and then a lot of, it looks like a lot of people took that trade. Oh, I just realized something. It wasn't on the chart. That was down here. There was just bullish absorption forming in this range, which obviously, especially knowing that we have this target overhead, it'd be an interesting idea to scalp along in the local range, similar to what I would be interested in on ETH. But anyways, read-only updates. So the Learning Ape is just, you don't have the read-only updates and all that stuff. You just have the educational materials, and then you have there's that tier of chats as well. It's just a lot less active. I'd say a very small percentage of members are in that Learning Ape category. It's probably something like 2%. Almost everybody's in the higher tier, so. Anyways. And then there's the public channels, which certainly aren't as active. Yep, Learning Ape has a chat room. And what might happen on this live stream, you know, I guess in some sense I would anticipate some direction in volatility. ETH retesting this local range swing failure, but I'm not particularly interested in this scalp short. More interested in the long and seeing if we reject. Although rejection here, if you see some weakness, it's a reasonable short. But I would certainly be waiting for weakness. But because we have this liquidity right above us, I'm not as interested on the short as I am on the scalp long if I get it. But it's reasonable now with this low time frame rejection forming as a scalp. The idea here would be that, yes, we do have bullish absorption forming, but maybe seeing some kind of range here before we impulse up to the highs, if that's an idea. I'm going to let this short go. I actually kind of want to pull up ETH's order flow on Coinalyze, and I'll share that as well. It's just easier to see the CBD here. Just bear with me for a second. I'll put it up on the screen. Interesting. All right. So ETH CBD was bullish before this move up on a higher time frame. This was quite defined bullish absorption before this impulse. But it is starting to get bearish locally up here, so that actually informs the short a little bit, the scalp short. So we are starting to see absorption, and what this is this is just market orders. It's showing you how aggressive market orders are versus how aggressively limit orders are absorbing them. So that's what forms the divergences on CBD. They're not the same as RSI and other momentum indicator, because it's not a momentum indicator. It has nothing to do with RSI. So the divergences are actually opposite. But that's worth noting. We have some local bearish divergences forming. Which does mean that I might prepare to take a short, scalp short here on ETH, maybe risking 0.5% if we see some more weakness. Typically, I just like to set up my order and market into it if I like the reaction. Bitcoin also forming local bearish absorption. So that's another confluence for Bitcoin and ETH. Certainly want to be seeing some bearish absorption forming when you're shorting. Actually, what the hell just happened? Gotta refresh this because it completely changed when I changed the time frame. That's one thing I will say. Okay, now it's back. If you leave, that's the one complaint I have about Coinalyze. If you leave your page open for too long, the CBD line it's like it loses data, and so you should refresh it fairly regularly. So I'm gonna go over to this really quick. So bearish absorption here is just you're seeing price making lower highs as CBD is increasing back up into the highs. So there's signs of absorption happening here. Absorption does not mean price has to go down. It's just telling you that there's big traders absorbing buying pressure. So I'm going to wait for this rejection. I am going to take a scalp short here on ETH. I actually do like it. Just always using risk management. These are not trade signals. This is just me explaining what I'm doing and why. Leaving a little bit of room for a price to come up and double top here, but locally. But yeah, I have explained this before, but when you're scalping, your idea is, like, say you're scalping a local range, right? Your idea is to try to scalp the highs of the range, the lows of the range, hopefully using order flow as a confluence. And then, you know, understanding that trading low time frame levels, your win rate's not particularly going to be high, but you're not trying to just hit a home run on one trade. You're trying to take maybe 3 or 4 trades in a range. Your winner should be bigger than your loser. So let's say this is a 4-to-1 or a 3-to-1. So I make 3 times more than I lose if I lose. And maybe you win 50% of them and you come out ahead. And that's how you should approach trading just generally. You're just looking to progress over a series of trades. But yeah, when you're trading a range, you should be prepared to trade the range lows, the range highs, and continue on. And I might just get stopped out here. But we do have a new 15-minute candle opening. And if we were consolidating at the highs here, I probably would have waited for that 15-minute candle, just because it's not about a close below or a close above, but pivots like to come in on new 15-minute candles. So like typically if you're, and I know I took the short there a little early, but typically if you have a new 15-minute candle opening in 2 minutes and you're right at near an important level, it can be worth waiting for that 15-minute candle to open, put in a pivot, and then reject. And the same goes on a higher time frame with 4-hour candles. If there's a new 4-hour candle in 15 minutes or 20 minutes, oftentimes those 4-hour candles like to put in pivots. And so being patient and waiting for that candle close or that new candle to open can sometimes give you a better entry. Yeah, Bitcoin's local bearish absorption is getting quite well defined on the 15-minute chart. Certainly making it likely that we see the lows, that major high, before this level, before we see the highs of the range, if we do form a range here. But also we're at major resistance, so we could just break down. But for anyone tuning in, I am short on Bitcoin from around here, stop above this high. And I'm short on ETH now on a scalp. That is threatening to get stopped out here. But I'm not going to close my short early here. I have no reason to. I can let invalidation hit. That's perfectly fine by me. Invalidation is taking this high. And of course, we can just take this high and then reject. But then you get stopped out of a trade. You can't win them all. But I will note that you know, when I take a short or a trade, just generally, I start seeing price move up. I don't suddenly start thinking, oh, I've made a terrible decision. I should have never shorted this, because I already know price can go up. I made an informed decision, and I noted the bearish absorption here on ETH. We have bearish absorption locally between these two highs. It's reasonable to try a short here as a scalp from the highs of the range. And win or lose, I'm perfectly fine to have taken the trade. I have Bitcoin's CVD confluence. I also do have the fact that although I think it makes sense for ETH to take this high, it may not. And I have the fact that Bitcoin is at and rejecting from a major resistance with bearish absorption as well. So that does inform this scalp short a little bit as well. But right now, we are technically breaking up instead of swing failuring and retesting this high. And I know these terms don't mean something to everybody, but there's a lot of members in here and they'll be familiar with these terms. We have to make note that we are now back above this high and potentially reclaiming it, but it's very low time frame. So, but for anyone wondering, if I'm short from here, my invalidation's up here, I'm not going to close my short early just because, or I would have put my invalidation here if I wanted to close it early, which it's not. It's above this high. Mark Woodlong says, I'm long, and then he says, don't fade the pump, haha, been hurt too many times before. Well, although I have taken my share of stops in my career, I had a short plan for exactly here. I faded that pump. And I won't go into all the technical analysis here, but we had this, we had a lot of other ideas. And I shorted here. I faded that pump. I shorted here. I faded that pump. I short resistance. So the point being is I prefer to short resistance with invalidation. My opinion is that shorts are best taken with clear signs at resistance, because obviously if we look at a chart, the pumps are always where the tops come in, right? So shorting the pump is sort of a prerequisite for shorting resistance, because that's how tops come in. And in a sense, longing the dump is always a prerequisite for longing support. It's hard to get one without the other. So I'd prefer to short resistance with risk management, understanding that I might get stopped out. And it's not because I think or know we will dump or we will pump. It's just I'm willing to short resistance and long support with risk management if I have a series of factors in my favor. Daniel asks, if Bitcoin doesn't take the high, there is bearish divergence forming, right? And then he says, or is that leading? How do we know if it is leading or not? You know, you can't really know. So sometimes CVD leads price and you start seeing what appears on some time frame as bearish absorption, but it's just showing that there's aggressive buying pressure coming in. And yes, there is limit orders absorbing it, but if that resistance breaks, then price makes a new high, and suddenly that bearish divergence doesn't exist, because the definition of a bearish divergence is price is making a lower high. And the truth is, there's really no way to know with certainty is CVD leading price, but the more dramatic those bearish divergences become, the more likely it is not to be leading price. And And being at a key level is very important. So this is something I say often. I really don't trade divergences in cumulative volume delta on their own, because you do want the you certainly want the confluence of technical levels. Someone in the Discord says, "Thank you for your live streams. I watched the one yesterday and just took 2 trades on the 1 minute chart on Bitcoin and made like 4R, just using basic levels and fibs." And then they went on to say they're a new trader, but they're starting to see 4R is you risked $1 and made $4. But they're starting to see that you can scalp low time frame price action and make some money. But I will say scalping can be a very dangerous. Well, I guess he watched the live stream yesterday. I went over all this in the live stream. So it's kind of a dangerous idea for new traders because more risk of having execution errors, which can lead to kind of spiraling emotionally. So if you're a new trader, I recommend just trading with paper funds, right? You'll be surprised that even if you've learned a concept, right? Like, oh, I'm going to short the range highs. And then when price gets there, you start getting emotional about it. And even if you have a plan and it's, I'm going to short the range highs, I'm going to long the range lows. And even if price does exactly that, you'll find that for some reason you long the highs because you thought, oh, it's not going to break down. It's going to break out. I'm longing here. And then when you get the range lows, you think, you know what? I wanted to long this, but it looks really bad. And you end up shorting the lows. And you have to overcome some of that those emotional impulses and sentimentality when you are learning how to trade. So it's really not, I don't think, wise to be putting a lot of capital at risk when you're learning how to trade, because it's not just about learning technical ideas and order flow and all these things. You need to develop the psychological and emotional tools that come along with trading. Someone asking, when I'm scalping, do I only do it at key levels? Yeah, I mean, generally, there's major high time frame levels, and then there's minor key levels, but typically where price will start forming consolidation and ranges is at key levels. Here we're really just chopping through these highs, but we form a range, and then the range offers up its own levels. It's funny. It's funny because I'm gonna go to the 5-minute chart here. I did a live stream here on ETH at this rejection, and it wasn't a scalping live stream. It was just a quick chart update on ideas I was looking for. And I was just saying that although I'm not taking the trade, this was like 3 a.m. for me. I was about to go to sleep. I think it was Sunday night or Monday morning, depending how you look at it. But I was just saying, like, here we are. And although we don't have a major key level here in a lot of senses as support, we just have the structure of our local price action. And price was coming down right here. And I said, it wouldn't be surprising from a local range to see a bounce here, at least locally, which did play out. But it's just funny because it actually ended up being our major low before continuation. And really the way that I would have identified this idea is just this pivot low on a 5-minute chart getting swept. That's a liquidity idea. People are longing in this range. They're putting their stops under this last retracement. Price comes down, wicks them out, and then has continuation. So low time frame structure, I think, especially for continuation and in trends, is really important. And we're seeing the inverse here. That although this is not a major level, there's a major level above us, there's here, it is the most important idea locally, which is we've put in a high, we've now swept the high with bearish absorption, and from a local range perspective, this wouldn't be surprising. Now, does it mean we're going to reject to $800? No, but it's just the same idea of like a range here, come back, retest the lows, and then impulse. And so, anyways, this is generally a scalping live stream. I have my swing trades in, and I might scalp some ideas here. I'd like for the lows to get tested during the live stream, frankly. Someone says, are you long on ETH? No, I shorted ETH up here. This is a short. I'd be interested in longing ETH if we see this. Someone says, you don't do TP1 at the mid and TP2 at the lower, like on the ETH trade. Yeah, so what he's asking is, like, let's say we define this as a range, however we could draw it a couple ways. He's saying, would I take profit 1 at the middle of the range and take profit 2 near the lows of the range? And I actually do like taking profits, like closing 50% of my position in profits under certain conditions. The way I would approach this, it's sort of a more nuanced version of that, is I want to see how price reacts with local structure. That's why I'm on the 1 minute chart. I'm sitting here. I can make a decision. You know, are we breaking this level down, or are we bouncing from it? And I might just take TP based on how price interacts with the structure. If we break this down. Because the middle of this range is actually not a great place to take profit. You would want to, in my opinion, you'd want to see price bounce and start reclaiming some of this structure, in my opinion, to take profit. And if it's not, then there's no reason to take profit early. But I understand that you're not always available to make a decision and watch the charts, in which case just setting limit TPs makes a lot of sense. Someone asks, what would you consider your biggest edge over other traders? Many years of experience, tens of thousands of hours, and just being better than them. No, I mean, I'm kind of joking, but not really. I mean, I've seen so much price action that, you know, individual traders particularly, I don't know how much edge I have over other individuals, but generally, you can even just see it in the order flow. People are doing the exact opposite, almost always, of what they should be doing. You always see the most longs come in at the highs, the most shorts come in at the lows, and people are usually making emotional decisions. Someone's asking if I compound my shorts or if I just go big at the beginning. Typically, or my scalps. Wait, did they say shorts or scalps? Let me find that question again. Oh yeah, scalps. Typically I just trade it once. I don't like for a low time frame scalp, and I want to short the highs of the range, I like taking a position at resistance. I don't like adding to it as price goes down, because how important, like, or let's say wherever you took it here on this breakdown. It's like, how important is this weakness to say, then you end up in this weird position where you have this entry or this entry, but then you're adding to it, and now you're underwater because you're adding to your short in the middle of the range. It doesn't make sense to me on a low time frame to start adding to your short or your long or your scalp. I'd rather just have one. If it gets stopped out, it gets stopped out. Have one from the highs of the range, have one from the lows, and not be adding in the middle of the range. Someone's asking, how do you differentiate your risk between your scalps and your swings? Are your scalps 1/5 of the risk of your swing risk? You know, there's nothing wrong with just risking the same on a swing as you would on a scalp. You know, if you're confident scalping, and it's the same idea, it's the same principle. If you're going to take 10 scalps, and you say you win, let's just say your win rate is 50%. You know, price can go up, it can go down, and you have a system that generates a 50% win rate. You make 5 times more, 3 times more than you lose when you win. If that's your edge, then there's nothing wrong with trading that with 1% risk. But one thing that I want to mention is risk management is really important mathematically. Like, the reason you use it is not necessarily because of how confident you are in your trades or not. It's that if you don't limit your risk in your trades to some degree, and typically for people that's between 1% and 2% as a cap, for most traders, that's going to be the most you should risk on a trade. It's because if you take 1,000 trades or 100 trades or 500 trades, you're mathematically guaranteed to run into a 5, 6, 7 trade win streak. For most traders, probably higher. And you don't want to be risking 10% when that happens. And it's actually mathematically guaranteed to happen if you have a 50% win rate. So, or even if you have a 70% win rate, it's mathematically guaranteed over enough time you're going to run into a big loss streak. So my point is that that's where you can cap your risk. But another thing I like to think about risk and how I would present it to somebody is, it doesn't mean you have to risk 1% or 2%. You can also evaluate how much am I comfortable risking on this trade to where I'm not going to get emotional about the outcome. I don't care if I get stopped out. How much money am I willing to risk to see if this idea will work? And that answer could be, you know, in a percentage terms, it could be 0.2% of your account. It could be whatever that number is that makes you comfortable. And it doesn't have to be 1% risk. And so in dollar terms, you know, it could be, I'm willing to risk $5. To make $20, I'm willing to risk 5 to see if this trade will work. But for everyone, that's different, right? And the reason I bring that up is because I see a lot of traders who they maybe have a lot of money, right? They're brand new traders and they have a lot of money. Maybe they have $500,000 or $1 million. And they start thinking, okay, well, I got to risk 1% on all my trades. And that's, you know, $5,000 on a trade or $10,000 on a trade, because they're trying to trade with their net worth. And they're emotionally obliterated every time, boom, $5,000 gone like that in a second. And that starts to really scare people. And just because, you know, $5,000 is 1% of your net worth, it doesn't mean you should necessarily trade with all of that, because you might not be comfortable losing $5,000 in 8 seconds. And maybe your risk should just be what you're comfortable with. And I see this a lot. Like, yeah, I've seen it a lot over the years, and is just people who, they would present that they're comfortable with a trade. You know, I understand this could win, this could lose. I'm comfortable. I could make $10,000 and I only lose $2,000 if I lose, and that's fine. And then they take the loss and they're like, "Holy shit! I should never trade again." That's insane. I just lost $2,000 in 5 seconds because they take a long and then the price moves through. So, anyways, I'm kind of rambling here, but the point is, 1 to 2% risk could be a cap, but ultimately the important thing is that you're not risking any more than you're completely fine losing, because you're going to start making terrible decisions and emotional decisions as you lose money and as you win money. All right, somebody's asking if I can look at the ETH/BTC pairing. Which is this even in alphabetical order? Rat. Yeah, I've been following the ETH/BTC pairing. But I had an Elliott wave count, and it's not necessarily off the table, but I would have liked to have seen this hold a few weeks ago, but always have the risk of a breakout or a rejection. But of course, you would just argue here certainly that just on a local level, ETH just swept the lows of ETH/BTC relative strength and is now having a nice reaction from support. So you could imagine, just from a local perspective here on the 4-hour chart, that ETH, if this range low holds and we carry on higher, might start outperforming Bitcoin. Someone's saying, can I do more macro TA as we're breaking out of a big range? Well, yeah, macro. I mean, if we break out here, there's no resistance. There's some levels around 28,000 that are interesting to me. Obviously, this high is a big target, but I mean, yeah, there's really nothing to add to the macro TA I've done. I mean, I'll be honest. However this range develops, you know, this was a major target for me at 19,200 for 1, 2, 3, 4, 5 waves back in December. This was the idea, and then put in a correction down to like 19,200, which would be potentially a higher degree wave 1, 2, and then you're looking for a wave 3, 4, 5. This correction can play out several ways, and we can certainly come back and range here before that happens. But I would lean towards, out of all of this price action on a macro scale, price breaking up and taking these highs by the end of the year. Around 50,000. I think that's actually more likely than taking the lows. But I'm still willing to take shorts at resistance. I'm going to take longs at support. You know, not necessarily expecting price to go there overnight. But from a structural perspective, it's quite easy to imagine, if we break out here, where our next key levels are, right? Here on the daily chart, well, we don't have any structure up into this high. And we don't, if we break out of that high, we don't have any structure up until this high at 50K. So price could move very quickly through these levels. I can't remember when I shared it. I was definitely bullish down at 16K, and by bullish I mean I was taking longs and taking swing longs. But at some point I shared, hey, by the way, you know, well, for one, at that time, this seem like a crazy target, right? Taking the 25K high seems almost impossible to people. Seems like cope. But also pointing out, and if we flip these highs, well, we're probably going to 30K. Or in this region, 28K, 30K. The reason that I would say we could front run this high is there's some SR flip ideas here around 29,000 with some fib confluence and other things, and even a little bit of volume ideas in there, a little bit higher. But anyways, the point is, even though I'm shorting here, I'm not going to be surprised if we do see a breakout or a minor pullback, a breakout, and I wouldn't be surprised to see price move up through these levels very quickly. You could even have some consolidation here, no pullback, and another break up to 50K. And the thing is, like, that it's the same thing as this, right? Is you could say when price is consolidating here is there's no structure here. If price breaks out, we could travel through this area of the chart very quickly. And if we break out of this, we could travel through this area of the chart very quickly. And people can't imagine that happening down here. So they think that sounds stupid. But the reality is, if we break out here, there's no structure. We're the most likely scenario is we're going to move through this area of the chart quickly, which means 30K. And if we break out of 30K, I'm not saying we will break out, but the most likely scenario is we move through this area of the chart quickly to 50K. And you can just keep applying that logic because there's no resistance. Which is why, as we broke out of this local range on Bitcoin back in the summer of 2021, well, how much structure was there on this move down? Almost none. So as soon as we break out, we can just retrace the entire move super easily. Someone says, why are you shorting? There's really no weakness, is there? Depends how you define weakness. And what I mean by that is, well, we do have a clear rejection, right? There's certainly some sign of weakness on a local perspective. And then we have bearish absorption in order flow at a key level. And the thing is, I could share a zillion analyses from 4 months ago where this has been a major level for me to target shorting. Like even down here, right? I said, hey, I'm probably only interested in shorting. I shared this channel. I shared this level yesterday or a couple days ago. I said, I'm really only interested in shorting reaction and signs of weakness from here. So I'm not just looking at the chart one day, totally shocked and surprised and saying, well, I'm just going to short here. Price is going up. This is a level for me, how I analyze the market. So I'm interested in taking a short. At this level, if we're seeing signs of weakness and just using risk management. I mean, certainly you could wait for like this and then, maybe hope for some kind of retest and look for a short there, but that's just a different idea. Someone's asking, Gerard's asking if I struggled with discipline, keeping 1 to 2% risk, or did you also degen back in the days? You know, the thing about risk management is the hard part about it is first understanding really why it matters. Like, discipline aside, is you kind of think like, well, this is a good trade setup. Why would I only risk 1 or 2% on this? Because, you know, I think we're almost certainly to bounce here. Shouldn't I risk more? So you might have the concept of a stop loss. You might have the concept of limiting your risk, but first you really have to understand, and some of this can be understood conceptually, and some of it has to be understood with some experiences. Okay, yeah, if I take 500 trades, which over time I will if I keep trading, I am going to have loss streaks. There's no avoiding it. It's impossible. And I don't know when those are coming. And so I think, for me, it was just about understanding, like what made it easier to manage risk is when you accept that reality as a fact. Like you actually understand it as a fact. It's not an opinion. It really can't be about, your decisions can't be based on how likely you think this trade is at any given moment. You really need to make the decisions based on the fact that you understand you're going to take hundreds of more trades and you really don't know which ones are going to win and which ones are going to lose. Then over time, you actually start really valuing the calmness that risk management gives you, and the peace of mind and the ease of mind, just knowing that, hey, I can take this trade. The outcome is irrelevant. I'm going to take another trade and another trade, and I don't have to be stressed out every day about every position I'm taking, because really it doesn't matter. As long as you're making reasonable decisions, taking reasonable trades, the balance of probabilities are in your favor. And there's never a single individual loss or day that's going to ruin your trading account. So you're saying, agree 100%, but some people understand why you have to apply risk management, but still not sticking to it. As you know, Mark Douglas, I think, is the best. He has kind of the best take on this whole idea, but there's a difference between understanding something in the terms of somebody tells you, you see the math and you're like, okay, but then there's a difference in believing it, right? So like truly believing it. And the example he gives is the market, the market has probabilistic outcomes, and you could kind of accept that in your head and know it in a sense like, yeah, I understand there's no way to know what's going to happen. And I understand the outcomes are random on any individual trade, and you understand that, but you don't actually believe it because your decisions are still being made as if that's not true. You're still making decisions as if you know what's going to happen, and you're not accepting that the outcomes on an individual trade basis are completely random. And so, yeah, certainly, just like anybody else, you kind of like have this, you go through this phase where you have a habit of evaluating the probabilities of some trades. It's your best idea. It's the idea you've had for so long. And this was a big topic up here. back in spring of last year, when this Gartley idea played out. So this was like a multi-month idea. We hit this target to the dollar, this target to the dollar, and this target. And somebody asked me, if I would just take a huge short here, because it's like this idea has just played out perfectly, and why not just trade it? And I'll be honest, so that's where you have the urge to say, like, I should just go heavy risk here, because this idea is so good. There's so many confluences. Everything is perfect. But, I said at the time, I'm just going to trade it like any other idea, because, yeah, it can feel like you should make, you've put in all this work, your idea's played out perfectly, and it's like, I should really capitalize on that. And there are traders who believe that. But I think generally what happens is, what I've experienced is, as soon as you start letting yourself justify why some trade is 10 times better than all the other trades and you should put on way more risk, maybe it works and you get rewarded for that. But now you have in your psychology that you're looking for a reason constantly to justify why the next trade is worth putting on more risk, because it's way better, just like that other trade that you took that worked out so well. And so, I think those are things that you have to experience yourself and build your own ideas. But eventually, for me, I just realized it's better just to treat every trade the same. No matter, this is the best level ever. Wow, we're at 26K. This is the perfect short. Does it make sense to then risk 5 times more here than I would anywhere else? For me, the answer is no. But there actually are traders who have different opinions on that. That you should trade your best ideas with more risk. But personally, I find that that's just a slippery slope of trying to justify more risk constantly. And it also adds the pressure of mismanaging your trades at a key level, because you're taking on more risk, you get a little more emotional, and then you can end up getting stopped out and maybe trying to re-enter, stopped out again with increased risk. And then you're not really evaluating price action objectively anymore. And then the move happens, you completely miss the trade because you've taken on way too much risk. Someone's asking, can I check CVD again? Still bearish locally. It doesn't mean price has to reject here. It's just a confluence, that resistance. We're consolidating with bearish absorption. See, this is kind of the most annoying outcome. You start a live stream, and then price just goes absolutely sideways, like flat in a 0.5% range for an hour and a half straight. So that being said, yeah, like for me, I enjoy, getting on live stream and talking about these ideas and evaluating this stuff. But what I actually don't spend my time doing as a trader is sitting and staring at the 5-minute chart all day. I have my plans, I have my ideas, I have my invalidation, and I wait for levels to hit. But I have lots of other things to do with my life. And so, I'm not necessarily interested in having a 20-hour live stream here, watching price go sideways. But basically, I'll go over my ideas here. So I have a swing short here on Bitcoin, accepting that even if we reject here, we could sweep the highs and form a local range of some kind. I am interested in reopening my short if we do that and trading this with local entries, but as swing ideas short. I'm also interested if we can form some bullish absorption, say fill this wick, sweep the liquidity below it, take the major or retest the major highs that we're breaking out of. I'm interested in trading that as a scalp long as well, and I'll have my short, I'll have my long. They're being traded on different time frames. Looking to take profits locally on the long if we see a rejection here. So the idea would be something like a TP1 here. Looking to carry the rest here, sweeping these highs. Looking to carry the rest as a potential add to my swing positions. And looking to use some of those profits to maybe consider offsetting the risk on my short and offsetting the stop if we take the range highs. And just kind of trying to trade the local price action accurately with two goals: to build a position and to offset my risk at the same time. And so, I know that's kind of a complicated topic maybe for some people. On ETH, high time frame, I would like to see this 786 kind of around 1833 tapped. I'd like to see this high taken, or sorry, this high taken, or sorry, this high taken, but ultimately high time frame, this high taken. But I'd like to see this high taken into the 786, into this channel on a higher time frame. But I am in a scalp short off the local bearish absorption. Although I'm not going to be surprised to get stopped out here as we kind of grind up and consolidate. I'll just take the stop. It's about 0.6% away. If we do get a retracement into the local lows from here, which I would like to see, you know, this bearish absorption play out, not just so I can have a winning scalp short, but so I have an opportunity to take a scalp long down here, sweeping these local lows and off a nice reaction. And I'll be scalping that again up into the highs of the range, but mostly anticipating this liquidity to be taken, and I'll be leaving some of that position open for this $1,833 target. But anyways, I hope you guys enjoyed this live stream. I will be giving updates on the Discord, of course, as relevant. But no point in sitting here for 4 hours and watching the 5-minute chart go sideways. We do have bearish absorption. I lean towards lower before higher locally. I lean towards a rejection on our first test of this breakout on a medium and higher time frame. But willing to accept price can break out, which is why I use a stop loss.